I'm joined from Hong Kong by Robert Subbaraman. He's chief economist at Nomura International. Robert, thanks so much for joining us. So tell us what you make of these numbers out of China today. I mean, we didn't get the shock inflation figure that we expected after yesterday's rate hike.
Yeah, well, I think 9.6% growth was pretty much in line with expectations. The economy slowed a little bit, but I would characterize it as slowing to a kind of cruising speed now. Maybe it'll slow a little bit more, but still stay above 9% in Q4. And the forecast at Nomura is 2011, 2012, China's economy is going to be in the zone of 9 to 10% growth. The most encouraging thing in the numbers out today was, I think, retail sales growing 18.8%, stronger than expected. And there are signs that the economy is rebalancing. Encouragingly, consumption is starting to play a bigger role, while investment is starting to cool off a little bit.
Now, if you say 9 to 10% growth in 2010 and 2011, that's higher than some other economists are predicting. What then is the risk for inflation? That's going to continue to be a problem.
We think so as well. The wage pressures are certainly building. Wage increases are getting larger. There's a big risk that productivity doesn't keep up, and it will lead to more inflation. Commodity prices as well. We think inflation will trend higher next year and into 2012. It was interesting today, while CPI was smack on expectations, the producer price index, which is a pipeline measure, an indicator of future inflation, it actually was higher than expected at 4.3%. So we think risk is inflation is going to remain an issue, and that's why for next year we have 4 more rate hikes. 4
more rate hikes, okay. So is yesterday's rate hike, or 2 days ago, the rate hike that we got from the People's Bank of China, was that an admission that they haven't really managed to get a hold of the property sector in the way that they had hoped?
That's right, and I think we would argue that China traditionally has used more micro administrative style, quantitative style measures to try to deal with the property market and other parts of the economy. And I think the fact is China's economy is becoming more market-based, more open, more sophisticated, and these administrative measures are starting to lose their effectiveness pretty obviously. So the property measures announced in April, they didn't work very well. We need new property measures. I think ultimately China needs to use interest rates more, raise the cost of capital, which is way too low for an economy growing 9–10%, and that's what we're forecasting. We think that's the ultimate way, the fundamental way to deal with the property market is to have higher interest rates over time.
Now, Rob, I haven't heard you talk at all about the renminbi. What does all of this mean for yuan appreciation?
Well, that's one of the challenges, I think, not just for China, but most Asian economies, is that they're growing at, or even some above potential. They need to worry about inflation. They need to raise interest rates. The risk is that's going to attract even more capital inflows and put even more pressure on the currencies to appreciate. But I think that's a fact of life in Asia. We're doing very well. We need stronger currencies. The biggest mistake China and Asia can make is repeating what they did in 1995–96 and keeping domestic policies too loose because they're worried about currency appreciation. That's going to lead to asset bubbles in their domestic economies.
Now, we have finance ministers of the G20 meeting in Seoul this weekend. Is there anything that can be achieved on this currency front? I mean, do you think we're going to hear inevitably more pressure on the Chinese to let this yuan appreciate more?
Well, hopefully there is going to be signs of better coordination at these up-and-coming meetings, because I think that has been lacking, and I would say now more than any time since the global financial crisis, the world needs good policy coordination. If it's not there, I think the risk is we're going to see a contagion of capital controls put across Asia, and any economist will tell you they don't work very well. They may work in the short run. In the long run, they're very distortionary. That's not going to be a good outcome. So I really hope that there is progress on policy coordination.
Rob Subbaraman, chief economist for Asia there at Nomura International. We thank you very much for joining us.